everybody attending today, including Auditor Brodie Thompson and his assistant Jenna. Welcome, and welcome to also anybody who might be watching online. So we'll kick our meeting off, first of all, with apologies. And we have an apology received from Councillor Guy Percival, apology for lateness from Councillor Hannah Halalali. Would someone like to move those apologies, please? Councillor King, Councillor Holding, thank you. Aye. All in favour, please say aye. Aye. Now, declarations of interest. I'm sure we all have a lot of interest in what's going on, so but no particular declarations. No, thank you. All right, so we'll move on to confirmation of the public meeting minutes. Meeting held on the 8th of December.
So moved.
Thank you, Councillor Hopkins. Seconded, Councillor McRoby. No comments before I put the motion to the meeting? Okay, I'll put that motion. All those in favour, please say aye.
Aye.
Against? Declare that carried. Right, now we're on to the memorandum reports. And the first report we have is the financial report for the second quarter on page 11. So, Mr. Wells, the author, Mr. Hope, the authoriser. What do you gentlemen to speak to it?
I'll let Mr. Wells speak to this report.
Right, Mr. Wells, the floor is yours.
So what you have in front of you is the fairly standard format by now for you to understand the financial results for the second quarter, the 6 months to the end of December. As the commentary states, we have enjoyed an operating deficit of just under $2 million against a budgeted deficit for the 6 months of almost $4 million. It's quite a good improvement, and in part that's due to additional revenue. We did not budget for our involvement in the water sustainability program. We received $3.7 million of government funding for water projects. That is currently held as income in advance, but we have recognised $600,000 of that in the December quarter. We're also moving with speed on the ops to ocean cycle. Shouldn't have said it like that. Where we have revenue from MB of over $500,000 over budget. Total revenue for the half year is $27 million, which is over budget by 1.2, and total expenditure is under budget by $400,000. And the reasons for those variances are on effectively the financial reports on pages 15 to 17. So I'll take any questions.
Right, thank you, Mr. Wells. Can I ask you just a question to kick it off? On page 12, it talks about depreciations under budget as a result of a rolling revaluation. I would have assumed that a high revaluation would have increased more depreciation. So
it depends on the makeup of the valuation and where the changes have occurred.
Okay.
So at the end of, in the valuation report, the valuer says this is your annual depreciation going forward. And that's the figure that we based that charge on. So that was under budget. When we're budgeting for depreciation on revaluations, it's a bit of a guessing game.
yeah, of course.
It's very difficult to know, firstly, how much the valuation will be or will change, and secondly, which components are going to be.
All right, so the value
it's a win for us.
well, that's good. That's a value actually calculates that figure. Yes, indeed. So, right. Anybody else any queries on?
So
Just Holding and Councillor Hopkins. Holding first, then Hopkins.
I was just the improvement of the 3.73 minute. What could someone refresh me what is sustainable?
So this is where council signed up, as I understand it, or maybe Paul should answer it straight off.
So it's the tranche 1 funding. It's part of the water reform, so it's its official title.
Yeah.
Just to follow up that, on the other side of that, I assume expenditure either goes to an asset or repairs and maintenance. Where does the
Yes, the bulk of it goes to an asset. Part of that funding is for additional staffing and for the setup of the Westwood offices.
Thank you, Mr. Wells. Councillor Hopkins.
Yeah, sorry, just a couple of questions here. looking at page 12, personnel costs exceed budget, driven by the decision in September to establish a long service leave structure and to extend to all staff the additional 3 days leave awarded to PSA members. So, who made the decision in December?
Well, that was part of the negotiations, as part of the settlement of salary requirements for the 2021 year.
So it wasn't referred to or discussed with the executive committee? That's fine, okay.
Very much a management decision.
And just the liability, next page, the liability recorded at June 2020 included a full fortnightly payroll of 600,000, as well as accumulated leave. Just, can you explain that?
So my comment is intended to explain the radical change in the liability for employee entitlements. At the end of June last year, there was a full fortnight's pay, as well as annual leave, other entitlements accrued for. In December, there is not a full fortnight's payroll accrued for. So there's effectively over $500,000 change due to that.
So, yeah, so I mean, it really is just all about the timing of pay periods and cut-offs.
Okay.
At the end of June this coming year, in 2021, the payment, the entitlement will again be quite different because of the time when the pay is in June.
So just to clarify, Mr. Wells, the pay period ends on for example, Sunday, and the pay is paid the following Wednesday, whatever it may be.
Yeah. That's right. So if it's Sunday or whichever day the week ends, I think it might actually be a Friday. Yeah, whenever that falls in the following Wednesday, if that's in the next month, then we get rid of all, and it's not.
Yeah, thank you for that. Yeah. Councillor McRoby.
Yeah, Chair, there's a number of references made in this document to the words commercial paper. Now, some of us may know what that is, but people that are watching or listening may not know what that is. Could we just get an explanation from Ian or Paul about what the word or the phrase commercial paper means? Page 12 is mentioned under investments and other entities.
So Appendix E has our Treasury Advisor's report on our borrowings and on the current economic situation and outlook, and that notes that our borrowings are split between one lot of commercial paper, 2.5 million, a number of notes and a number of bonds, and those different categories of borrowings, as I understand it, carry with them different rights and obligations and different interest rates. The commercial paper was very short term. It's already been rolled once, as I state in the Treasury Report. And, it's, as I understand it, Paul may be able to correct me, but it's the cheapest of our borrowings, and it's the one that we can choose to pay off first or go through the rigmarole of rolling it for another period.
It's really a commercial loan, is what we're saying. I'm trying to understand the wording between paper and loan, that's all.
Commercial paper is basically a way in which short-term borrowing is secured. So rather than almost an unsecured overdraft going through the LGFA, they have the device called commercial paper, which supplies security for those short-term borrowings at a cost-effective rate.
Yeah, no, that's what I was asking for. Thank you.
Yeah, just a couple of questions again. Looking at the capital expenditure under budgets, again on page 13, writing's under budget by 1.4 mil. Can that be caught up? And looking at Parks and Rec, why did they only spend half of what they were budgeting to spend? You know, is there a reason for that?
In some ways, that could be down to budget timing, because unless I receive information on the contrary, a budget is split over 12 months. And if the budget holder doesn't complain about that, then I leave it. So it could simply be that. But it could also be weather related, or ability to source contractors as required. I think
in terms of the rating, we wearing my other hat, in terms of roading delivery, the pattern in the roading area is to generally spend about at least 95% of approved budget by the end of the year, and that's certainly the intent this year. So it is all just about timing and contractor availability. Would have been further delayed by the need to address the flooding issues in January. The recently relatively fine weather has allowed progress to be made in terms of delivery of those capital projects.
Just one more question, Mr. Chair. If you may, on page, just looking at the numbers on page 17, looking at total public equity at the top, it was a year back 912,552,000. For the first time in a long time, it's gone down marginally. But is that of any moment or concern, or does that signify a trend or anything of the sort?
No, it's simply the fact that we've incurred a deficit for 6 months, and that's reflected.
Page 16, I can see the deficit for the period to date, to the end of December, so.
Right, got you. And the borrowings down below, 12, is that 12.5 million?
So we have a total of 15 million of borrowings from the LGFA, and 2.5 of that is the commercial paper, which at the time of writing this was mature in February. It has matured and been rolled for 6 months. So at the end of June, you'll again see a current liability of 2.5.
Right, so can we perhaps just go through it a little more, rather like all over the place, perhaps page by page quickly, and I just going back to capital expenditure again, if I can, again on page 13, Alps to Ocean, total of 1.285 million, had a budget by 950k. And you commented earlier that income from Alps to Ocean was also above budget as well. So is that a result of the new stage being built between Slater's Cutting and the Benmore Dam, the lot of
To be
activity?
honest, I'm not sure what's driving that. I do know, though, that our current contract for funding with MB, we have to have our final claim done by the end of April. So I suspect that we are rushing to achieve that.
Right.
And the budget was firstly evenly spread, and secondly not very scientific. So
Right, okay. Right, thank you. And yeah, so council is in fact funding that in the meantime until MB reimburses council. So.
yeah, so the contract is for approximately 50% of the cost to be met by MB.
Thank you, Mr. Wells.
Approximately.
Right, thank you. So page 14 is the impact of COVID, that's, we all know that. So then 15 is the statement of comprehensive income and expense. Mr. Wells has stated the income is higher than budget.
Development and RMA contribution, that's amazing, isn't it?
Yeah.
So it shows that the levels of activity have not declined. Anything that have accelerated.
Yeah. And thank you for the explanations on the right-hand side end with the variations making up the differences. So page 16 is the income and these are the expenses. So expenses also are above budget, resulting in a deficit before tax for the 6 months, 2.932 million. Next page is the 17 is the statement of financial position, or balance sheet, as we used to call it for many years. As Councillor Hopkins has observed, the value has gone down because of the deficit for the 6 months. No questions, all right. Moving on to, excuse me, Appendix B, Treasury Report, second quarter. Page 18. We understand pretty much what has been told. We've been told there. 19. Total funds, ins and outs. Cash flows coming in every 3 months from rates. So it'll be a positive cash flow in the 3 months of the year and negative cash flow the other 3 months of the year. Then top of page 20, we actually have some money in the investment at the present time, 3.5 million.
Yes, we did. I couldn't see the point in sitting on this money from the water sustainability project without doing something with it. So I think we've earned about $3,000 on that money, but it was better than leaving it in the checking account.
Indeed, Mr. Wells, yes, there's interest rates 0.24%, 0.28%, 0.4%. They're very, very minimal, but if you have enough money, it still mounts up. So, all right, going down other investments, loans and advances. Any comments, questions there? It's all just updated with the previous position.
If I could just make a correction to the report under North Target Irrigation, I refer to interest earned for the quarter, that's interest earned to date.
All right,
For the 6 months.
all right. Thank you, Mr. Wells. Page 21, other investments.
Yes, Mr. Chair, just for clarification, under external borrowings, council has joined the LGFA and received loan funding of 15 million on the 4th of November 2020, enabling the repayment of existing B&D facilities and the establishment of simple term deposits. So am I to understand that we've borrowed the money from them and put it in the bank and we're basically endeavouring to benefit from the margin?
We have, well, yeah, as I said previously, the term deposits were achieved because I said of the water sustainability funding, but also in part because of this money. We couldn't spend it all at once.
So let's be clear then. We are using this extremely cheap source of money as an investment platform, albeit the investments are in term deposits.
No,
No,
That's what that paragraph
that,
says.
that wasn't the intent of why we borrowed the amount we did from the LGFA. It was based on projections before the funding from the Crown was confirmed. So that was essentially a cash inflow that we hadn't allowed for when we did our projection of the borrowing we required.
So you're not borrowing to milk margin.
No.
In fact, we're losing money on
That's-
deposits. We're actually, because the term deposits, you just look at back at the top of page 20, they're very short term. One matures in January, one February, one March. They're very short term. And as a result, they've got very low interest rates.
it would be impossible to make money.
I think, Mr. Chair, the normal situation would have been that we would have borrowed the money and it would have been going out on other projects. We at that stage weren't expecting to get 3.5 million in for the water projects. So that's, we've still had that other commitment, but what it means is that we've been able to offset some of the cost of the borrowing by at least investing for the short term.
Yeah.
So I think it's good juggling
Yeah.
by the finance team to make sure we maximise the benefit from that.
All right, so it was page 20, page 21. Yeah.
Sorry, just on page 20, I know this isn't about the Kura Untitled Irrigation Company, but it is mentioned our loan there. I just wonder whether Mr. Hope's got any comment about how, latest reports from the company with a mind to the security of our funding and the intention of that funding to bring good environmental and economic benefits to the district. Do you have any comment, Mr. Hope?
Yeah, thank you, Mayor Kirch. There was we circulated the papers from the monthly board meetings as part of the accountability under the loan document, and I think there's been some 3 items of pretty positive news in the last reports to the board. The first was they have got the final approval they needed to address the issue at the Bluffs just north of Kura. That contract has been let and a start date established, so that will allow the company to resolve that issue in accordance with what was required under the resource consent. The second was they obviously now have a far better record of the water they're extracting and how it's being utilised on farms. They've got around a 5% loss rate in the water that's being taken. That compares very favourably with sort of a between 40 and 50% loss that they estimated under the previous scheme. And that was certainly one of the objectives that council viewed favourably when it considered the loan. And the last is looking at the requirement that all of the irrigating farms have whole farm environment plans and that they will be audited. That was more on a voluntary basis and only on the irrigated areas in the past. So again, these having the whole farm covered and audited will ensure that some of the environmental outcomes that again council was after are actually being delivered in those farms and being monitored by the company. So yeah, in all positive improvements that really do support the showing that some of the objectives that council are after will be met.
Thank you
Thank you,
very
Mr. Hope. Yeah, just a comment on that point too, Mr. Hope. You mentioned the reduction in the amount of water being lost. It would be interesting to know where that water is not going to now, where it went to in the past.
Yeah, well, I think there are certainly some landowners that have some significantly drier spots than they have in the past. I mean, it was really just lost all the way along the scheme with the open races and the nature of the soils that they were operating under, and also the irrigation practices that were being undertaken. So, it's a really positive one.
Indeed. Councillor McGrady?
Question from the New Zealand Airline Academy and advances due to be repaid in April 2021, which is a few months away, and that's likely to be repaid. No indication that it won't be.
I think at the moment, no, there's not an indication, but I think it's a business that has been very badly affected by the lockdown and the ability to get students in the country. So it is something that we are talking with NZAA on an ongoing basis.
Right, on to page 21, other investments, and we've been there right over to the borrowings, the LGFA 15 million. Appendix C on page 22. I see it's headed up, Mr. Wells, as 30th of September. Is that correct, or is it?
Yeah, so we always report these internal loans and some of these other balances a quarter behind because of the capitalisation processes that take a month or 6 weeks at the end of each quarter to achieve.
Okay, thank you for explaining that, reminding us of that. So on the internal loans, only the major increases on the water supply, 1.8 million loan to that purpose.
So it'll be in relation to the new reservoir.
Reservoir, okay, thank you. Oh, Councillor Holding?
Just in regards to the Holmes Wharf project, so the figure of the 198,000 increased borrowing, and there's a 2,800,000, and then up the top of our page on page 13, the budget. How do those numbers correlate?
Sorry, yeah, so the 198, and sorry, which was the other number?
So page 13, Holmes Wharf spent to date 252,000, budget of 1.82 million. These are the numbers of the internal borrowings, they're different.
So we're looking at two different time periods. So the 252 is up to December, but the 198 is up to September. So I presume that they've spent another 54,000 in the quarter to December.
Yeah. Yes, mentioned a few minutes ago, Jeremy, that these are to September. And they're running out to December, so yeah, just a different time period.
So the loans you're looking at are at September, not December. Yeah, it could get a wee confusing.
Yeah, indeed.
Yeah, no, I think the main thing that Councillor Holding's getting at is that overall the budget's 1.82 as well, which is there's still more work to be done, money to be spent. Hopefully we don't end up spending that much money. Seem to be making good progress with less at the moment. Stages getting on with that. But good, the progress that has been made.
Very good.
Just another quick question, and that's on the water reservoir. Is it being commissioned yet?
It's about a week away from being commissioned.
Right. Very good.
Will the ribbon be snipped or a tap be turned?
Oh, certainly a tap will be turned. I'm not sure we'd snip a ribbon. It might be a wee bit damp inside and a wee bit hazardous, but
rather large ribbon around the outside. All right, on to page 23, which is the special funds reserves balance.
Nice to see the RMA reserve up to 1.3 million.
Okay, 24, Treasury Report, which is the Bancorp report. And this is provided to Council quarterly, Mr. Hope, is that correct?
That is correct.
Yep, so, quarterly update from our financial advisors. We go through on page 26, the financial environment, market overview, page 27. Some graphs showing rates, movement of rates on 28, yield curves.
Somebody just, at the very bottom of that page, the sentence reads, the numbers in brackets highlighted in red are the interest rates that WBC achieved for its funding. There's a yield, above that is the graph showing the yield curve with a red line, but I can't see.
It's on the table on the next page.
Ah, sorry, right, yes, okay, apologies, right, thank you.
So according to Bancorp, we've achieved possibly the best rates available for local bodies, which is quite an achievement on their part or our part. I'm not sure.
But yeah, well, certainly the floating renewables at the FRE and floating renewable notes, is it? And the floating renewable bonds, the notes figures are above and the bonds are a bit below, but very interesting. So, yep, 29 on to 30.
So what do we make of that graph at the bottom of 29? It says the comparison to market rates, where it looks as though we've kind of dropped at one point and are now significantly below.
I think that probably relates to the table again, as Councillor Wallstein's noted, the interest rates on the notes are slightly above the market and the interest rates on the bonds are slightly below. I suspect that's what's shown on the graph.
So we don't read the grey line as being market rates and the blue line as being our rate.
To be honest, I'm not
You
sure.
You
Yeah.
do.
This is what we're paying, so we're paying less than the market.
So the market has moved upwards since we raised our funds. The green bit at the bottom shows essentially the favourable margin. So very minor sort of negative impact over the shorter term stuff, but very positive over the longer term.
Okay, right.
Yeah, so the top grey line is market rate and the lower blue
So that's
line
the
is our
current market
rate.
rate versus when we went into the market, what we managed to achieve.
So the longer term lending,
Okay.
about a bit over 0.4 of an advantage, 0.4% advantage.
The explanation and the image just don't marry. I'm not saying you're wrong. I'm just saying if you show that to a person and said the blue line is the Waitaki district line, I suspect people say, "Oh, goodness me, we're not doing very well, are we?" But I think
This is what we're paying.
This is
So
why-
we are doing well.
This is why-
Other way
Oh, I
around.
see.
Oh,
Right,
right.
yes, right. Apologies.
So most of the
Yes. No, that's fine.
All right, 29, page 30, debt and covered profiles. This shows the term of each amount of borrowing, each tranche, and what it is, whether it's a commercial paper or a note or a bond. And just there are the pie chart of the maturity profile the next 12 months. Profile by type, showing the vast majority of bonds, not the vast majority of bonds, and smaller, the commercial paper is the smallest type of borrowing. Fixed rate hedging percentages. Can you perhaps explain that, Mr. Wells, Mr. Hope, just so we understand what our hedging percentages are?
I mean, these are basically, this is the last couple of pages, reporting against the limits in our liability management policy. And so it's really just using charts and tables to show that we are in compliance with the policy.
Right. Okay. Thank you.
So that's really right through to page 33.
33, okay. 31, 32 is not much on there. 33, also compliance.
Just one last question, Mr. Chair, on 33. The reference to the council maintaining liquidity within policy control limits to be advised. Is an answer possible to that?
No, sorry, I'd need to go back and check that.
Is that something that Bancorp establishes?
No, because that's more to do with our day-to-day cash management. So we would have needed to provide them with up-to-date figures on the, was that the 31st of December, and because they repeated this report basically before we'd finished ours, we weren't able to supply them.
All right, thank you, Mr. Hope. All right, so that's the end of the Bancorp report. So going back to page 11, would someone like to move? We receive information. Councillor Hopkins, Councillor Roby, all in favour, please say aye.
Aye.
Against? Clear that carried. Right, now we move into public excluded. So would someone like to move a resolution that we exclude the public from the following business? Councillor Roby, Councillor King, all in favour, please say aye. Aye. Against? Clear that carried. Just pause for a moment while we cease the public transmission of the meeting. Thank you to those who have been watching. I hope you found it of interest.